Hi, my name is Jason Paltrowitz, Executive Vice President of Corporate Services for OTC Markets Group. I'm here in London at the Edison Market Center and am pleased to be joined by Stuart Morgan, Head of Investor Relations for easyJet, which trades on our OTCQX market. easyJet is Europe's leading short-haul airline. Can you explain the company's business model and how you plan to grow?
easyJet's business model is based on a strategy of growing in Europe's primary airports. These are located in large existing aviation markets where there's high GDP, high propensity to travel and high customer wallet. easyJet plans to grow more and more in these existing markets. What we've seen in the past is that by taking a number one position, a clear number one position in those aviation markets, in those airports, we can drive higher returns. If we can't be number one, we'd like to be number two to a weak legacy carrier. Fundamentally, our lower cost in these markets enables us to offer the customer a lower price, which in turn drives demand. What we've seen in the past is that as we focus on these markets, as we get bigger, we can offer more destinations and higher frequencies, again driving demand. This also gives us cost benefits in terms of unit costs at those airports. As you get bigger, the unit costs come down. The growth strategy is therefore focused on growing more in the UK and defending our share there, as well as in Switzerland, where we're also number one in Geneva and Basel. In France, we think we have an opportunity to grow, particularly in the regions, and to maintain our presence in Paris. Elsewhere, there's a strategy of local city markets. Now, this particularly applies to Germany and Italy. For example, in Italy, we're focused on the north of the country, where again, there's that high GDP and bigger demand than you see in other parts of the country. So there we're focused on principally Milan and Venice. In Germany, it's mostly about Berlin. Berlin is an easyJet market. People like going there. It's a great leisure destination. We're growing in the Schönefeld airport, and in the future there's going to be a bit of a change, so we need to make sure we're in Schönefeld. The only other big market, I guess, is Amsterdam, where it's a sort of a hybrid between a market and a city strategy. Fundamentally, there's another layer to it, which is as we grow in the rest of Europe and the higher cost base needs to be mitigated, we're going to open some lean cost bases in Portugal and Spain, where that kind of lower cost production can be used to serve our markets in the rest of Europe.
Interesting. The company's recent results stress rigorous cost control. What does that look like for easyJet?
easyJet's got the lowest cost base for what it does. So effectively, we are focused on driving lower airport costs, lower ground handling costs, and mitigating our crew costs. Combined, those enable us to work in those primary airports where the overlap is mainly with the legacy carriers. I think it's not quite right to compare us directly with the other low-cost carriers who operate in secondary and tertiary markets. What we do, therefore, is we have a lean program where we look to offset those much higher costs. This is, as we were saying earlier, renegotiating contracts and growing in airports where they offer us better terms. In terms of ground handling, we are trying to be innovative here. We've just announced a deal with DHL at Gatwick Airport, which we think could be very interesting. And in terms of crew, as I said, we're looking at ways to offset the costs which enable us to grow by doing things like lean basing. We're also looking at other sort of structural changes through the cost base. Maintenance, we're seeing some improvements through predictive data, so using data science to drive the fewer number of breakdowns. We're doing a sort of organizational redesign, so the business has grown very, very quickly in the last 10 years, and we're trying to make sure now it's fit for purpose to leverage off the back of that. So all in all, we have a target of flat cost per seat between 2015 compared to 2019. We'd very much like to beat that, but at the moment, we're very focused on delivering that.
Other airlines have recently been in the press for problems with their technology. What is easyJet's IT strategy?
easyJet's been very well known in the last 7-8 years for its digital strategy. And I think part of that is the robustness and the resilience of what we do, which means that at peak times, we're selling out a flight every 7 seconds. So it's a very robust system. Nevertheless, the board and management team are very focused on making sure that we do have that resilience. We have an ongoing investment in making sure we can deliver and that our systems are secure and safe. The more exciting part of our IT and digital strategy is what we're now investing in over the next 12 to 18 months, which is rolling out what we call the future commercial platform. This is what's going to enable us to take what we have in terms of existing technology on the website and on the app, and to make the easyJet offer a bit more personal and appropriate, which we think then drives attachment rates and conversion rates.
What are the company's investor relations goals in the U.S. market?
I think the US is obviously just a big market, and there's a lot of money available to be invested in the UK and in Europe. So it's great from that perspective. US investors are also familiar with both the aviation and particularly the low-cost market. So it's nice to be able to go and talk to a sort of a more interested investor base. Southwest is clearly the template for all low-cost airlines. So again, we're familiar. But something like OTCQX is great so that I can do something like this and explain that there are some slight differences. Our low-cost model is slightly different from the US low-cost model. So fundamentally, we think it's another great market. OTCQX gives us good access to that market. And at the end of the day, I want to build the best shareholder base possible for the company.
What is your focus for the remainder of 2017?
There are some growth objectives we need to finish off this year. So those are time-constrained opportunities. In Amsterdam, we needed to make sure that ahead of the airport becoming full, which it effectively now is, that we grew very fast in there, and we now have a strong future position. In Berlin, similarly, they're about to open a new airport and close another one, so we needed to be in Berlin. Across Europe, I think there are some opportunities as some airlines struggle a little bit and where we might be able to take their place. So in Berlin, or Germany as a whole, Air Berlin is struggling. And in Italy, Alitalia has got some well-publicized problems, and we think that creates opportunities for us. In terms of cost, we're very focused on delivering that flat cost per seat target. But in the meantime, this summer, we're investing quite a lot in resilience of the network. So as the European aviation space becomes more congested, we need to work out how we can work better in that particular market. I guess those are the two things we're really focused on this summer.